the doctrine of the wisdom of the multitude, which is Aristotle, and then, of course, extraordinary popular delusions and the madness of crowd, which is Charles Mackay. Which brings us, now let me bring in my first guest here. Osaic Chief Market Strategist, Phil Blancato. Phil, I thought we were going to have the quotes here on the screen. I don't know what this is here, but you know both quotes very well. So on one hand, you've got Aristotle exalting the crowds and how much wisdom there is there. And then we always know on Wall Street hates crowds. They get afraid when there's too many people in there. Talk about the emotions. How do you deal with the emotions that have had a lot of people really worried lately?
I take advantage of it, buddy. It's really quite simple. In the end, emotions are a victim in some way, or become the victim, and they create the victim. And that sometimes you have folks that just get so wound up in it. They make horrific mistakes in their portfolio based on their emotions. It's the one thing I have to do every day. Strip my emotions out of it because they're irrelevant. Focus on the fundamentals, focus on the technicals, and you said something really important. I always want to know where the crowd is going, right? I tend to want to be not where the crowd is, and that's how you find success.
Yeah, and that's why I think it's really, really important, and I talk about this all the time, to know what you own, right? Now, if you're buying something for momentum, you're buying for technical reasons, it broke the 50-day, it's a breakout, whatever it is, it's bouncing off the 200, that's fine. But for someone who wants to really sink their teeth into an investment, I think you got to know what you own. If you know what you own and it gets too sold off, you should be licking your chops, really, instead of heading for the exit.
Well, you always want to question your thesis, why you bought it, what is it about it that made it was important to you. You want to buy things in your sphere, things that you know and like, something you appreciate. But you're right. If you see an opportunity today, I'm going to talk about Applied Materials. This is a great name. A name that's had periods of incredible success. If I can finally buy it on sale, a name I got great conviction in because you led the show with DRAM and where it's going. So I want to be with the company that's supplying the parts for DRAM. Well, I get a chance to buy it cheap. That's how we make money. And the old saying goes, buy when people are fearful. And that's right now, especially if you got conviction on a name just like you mentioned.
Let's talk about the broader view, right? Because you've been positive on consumers. They're regaining their confidence here lately. This is a consumer sentiment report, month over month. The index was up almost 10%. Expectations are up 15%. Why for you is this so important? You know, again, talking about the sentiment out there, this time being the consumer sentiment.
Well, we talk a lot about the K-shaped economy. I know the wealthy are more wealthy than ever. I know they're spending a lot. But you can't disregard the other portion of the economy that makes less than $100,000 a year, 100 million people. They're a catalyst. And when they're more confident, when they see their gasoline prices come down, unfortunately spiking a bit right now, but generally going to come down over time, when they see that they're gainfully employed, their wages are competing with inflation, as they become more confident, especially going into one of the most volatile times of the year. Remember, we are now in mid-July. What's to come in the next 2 months is when it really gets tough. If the consumer is confident, we'll have a less volatile period going into August and September.
And you're looking for a soft landing right now.
I am. I'm getting concerned about what's happening with Iran. You know, obviously, we need oil prices to come back down in that $70 range. And if it doesn't, we're going to have a tougher September than we expected.
And here's the thing, you know, only 2% of the street's looking for a hard landing right now. So whether it's a soft landing or no landing, we're heading in the right direction. You just mentioned Applied Materials. So I'm going to skip through that and talk about a couple other names that you like here. Let's go to the next stock because we just kind of covered that. And we know data center demand is through the roof. This is sort of the basis for the idea that you like next era. We've heard this a lot of times. I think some investors are wondering, though, when do these utility stocks start to really take off?
2027. It's real easy. We expect earnings to grow between 60 to 120% in 2027 across the industry. And the reason why, the demand is going to explode over the next 12 months. You see it. You can't have all these data centers coming online, all this demand for power besides data centers, and not have someone be the source of it. Right. So I really think this is an opportunity, not only be in commodities, because that's a part of the story, but in the people that's supplying power. I think it's maybe triple-digit earnings growth in that sector in the next most of 2027.
All right, less than a minute to go. Let's call it 40 seconds. Ross Stores. Listen, you talk about the surging sales. Management's been executing. They're growing their footprint. You know, these stocks have looked pretty good. Last week, consumer discretionary looked pretty good. It's also on the verge of a breakout. Where do you see it going?
It's a play on consumer confidence. You just said it. as that low-end consumer who's going to shop in this store at a store that's actually doing quite well in their own same-store sales up 20, 30%, depending on location, you have a stock that's got a 15 to 25% upside. And the reason why, we're going into that period of time. Think of back to school is the second biggest spending season of the full year, leaving the holidays aside. That's a big deal. Where you're going to shop in this store. It's also, to me, a bit of a defensive play. It's somewhere where we have to go to buy things. I wouldn't call it discretionary. I call it almost like a staple. And the reason why, I think it's become a fundamental place where people buy things for their children and their families. I really like the price point here. Look how it's traded lately, relatively flat. And at that, going into when it's going to have its best season of the year, great opportunity.
Yeah, and to your point, if you've been to these stores, you know they're strategically located, and people who live around them go there for everything. Phil, great stuff. Appreciate it, man. Thanks.
Thank you.